You ever look at a stock report and feel like you need a secret decoder ring? Yeah, me too. Well, that's exactly what we're going to do today. We're breaking down the technical analysis for Fluence Energy, that's ticker FLNC, to figure out what all these numbers are actually telling us. All right, let's get into it.
I mean, let's be honest. These reports can be super dense, right? But buried inside all that data, there's always a story. And our job is to pull that story out. So, let's get started.
So, what's the big picture headline for Fluence? It's a classic case of a double-edged sword. On one hand, you've got this story of just incredible growth. But on the other, there's some pretty significant risks waving at you. Let's dig into both sides. The report really kicks things off with a bang. The message is crystal clear. The overall trend is positive. It flat out says the stock is in a strong bullish trend. That means the momentum is pointing up, and a lot of the key signals that analysts watch are flashing green. But, that's never the whole story. And here is the but. Right alongside all that good news, there's a major warning about high volatility. Think of it like a car that's speeding up really fast but has a tendency to swerve. The report is basically telling us that while the direction is good, you got to be prepared for a bumpy ride.
Okay, so let's focus on the good stuff first. What's actually under the hood here? What's the engine driving this bullish momentum? Let's take a look at the evidence. First off, just look at the price action itself. I mean, we are talking about a stock that went from about $6 to almost $22 in just a matter of weeks. That's not just momentum, people. That is a full-on rocket launch. And it's really the first big check mark in the bullish column. Now, the report mentions moving averages a lot. So what are they? It's actually pretty simple. Imagine the daily stock price is like a really bumpy road. A moving average is like drawing a smoother line over that road to see the general direction you're heading. It helps you see the bigger picture without getting lost in all the little day-to-day bumps. Okay, I know this slide looks like a whole lot of math, but don't worry about the numbers. Seriously, just ignore them. The only thing you need to see is that the stock price is trading above all of those different trend lines. In Wall Street jargon, they call that strong bullish alignment. For the rest of us, it basically means all systems are go. And if you wanted to just boil all that positive data down to one single number, the report does it for you. It gives the stock a technical score of 70.15. You can think of that as a pretty solid B grade, which just reinforces this whole idea that the underlying trend is strong.
All right, so the bulls definitely have a strong case. But remember what I said, it's a story with two sides. So now let's flip the coin and look at the reasons the report is telling us to be careful. So we know the trend is strong. But what's lurking in the shadows? What are those red flags that have these analysts kind of tapping the brakes?
And the very first warning shot is all about volatility. The report makes it a point to say this stock can have some really wild price swings, sometimes even within a single day. This isn't a huge surprise for a company in a fast-moving sector like renewable energy, but it definitely means this is not a set-it-and-forget-it stock. It's one you'd have to watch like a hawk. This slide really captures the mixed signals perfectly. On the left, you've got these momentum indicators. Think of them like the stock speedometer, and they're showing strong acceleration. But then on the right, you have these other indicators that are more like the engine's temperature gauge, and they're flashing a warning that the stock might be overbought. In other words, the engine is running really hot and might need to cool off a bit. And finally, the report just comes right out and says the stock seems to be mildly overvalued. It's like this. The analysts did their homework, came up with what they think is a fair price, and the stock is trading a little bit above that number right now. It doesn't mean the price can't go higher, but it's another clear reason to be cautious.
So, we've got a bullish trend, but with some pretty serious warnings attached. Where in the world does that leave us? Well, the report actually lays out 3 possible paths forward from here, and it all boils down to a couple of key price levels.
So, this is the roadmap the report lays out. It's actually pretty simple. Think of 1954 as the ceiling and 1708 as the floor, right? If the stock punches through that ceiling, that's our bullish scenario. If it drops through the floor, well, that's the bearish one. And if it just kind of bounces around between those two numbers, then we're in a holding pattern, just waiting for the next big move. All right, we've looked at the good, the bad, and the in-between. Now it's time to put all of these pieces together and get to the final bottom line takeaway.
So after all that, what are the most important things to remember? Number 1, Fluence is on a strong upward path, but it's a risky one. Number 2, the key momentum signals look really good. Number 3, the biggest reasons for caution are that high volatility and the chance that it's a bit overvalued. And finally, the 2 most important numbers to watch are that 1954 ceiling and the 1708 floor.
And that really brings us right to the heart of it, doesn't it? This report is a perfect snapshot of that classic tug of war in the market between risk and reward. And it leaves us with a really important question. When you've decoded all the signals and they're pointing in different directions, which one do you follow? The powerful momentum or the flashing warning signs?